The following is a presentation of TFNN. Live at TFNN, The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the author of Mastering Probability, Steve Rhodes.
Good day, Money Masters and Treasure Hunters. Welcome to the November 20th terrific Thursday edition of the second hour of the Trader's Edge. I'm your host, Steve Perseverance Rhodes, and I hope that each of you are off to a great start of your day. Let's make sure that each of us do everything we can to have a terrific Thursday, and let's always remember what's talked about is a dream. What's envisioned is exciting. What's planned becomes possible. What's scheduled, folks, what's scheduled is my 7-week workshop out there. That's what should be scheduled out there, because that becomes real, and I will teach you to unleash that trader within. But thanks for scheduling some time with me right here, right now. I'm grateful for your presence. I'm here to serve you. So give me a call at 877-927-6648. Internationally, 727-445-1044. Together, you and I, we can go navigate these markets. We can go look for bulls and bears out there. Remember, if you've got a question, someone else has that exact same question. So don't do it for me. Don't do it for yourself. Do it for that other person. A random act of kindness. And boy, there's no better time of the year to do random acts of kindness than right now when we get into that Thanksgiving and holiday season out here. I mean, that's really what it's all about. This is Terrific Thursday. I'm Steve Rhodes. This is TFNN. Welcome to the show right now. Dow is off 22 points. She's trading out at 17,662. S&P is flat, trading at 2,048. Composite up 7. Russell 2,000 up 4 points. The DAX is off 39. FTSE down 31. We're going to have to do some real evaluation here because, as you know, you go back to October 31st, listen to the replay of the show that I did in the morning with Tom when I was over in beautiful Clearwater Beach. Oh, my goodness. And we were doing the show, and I said, hey, this is what the market gapped up a couple hundred points inside the Dow. And I said, okay, it's time for the market to move sideways, consolidate, maybe pull back into November 21st. Today's November 20th out here. And I said, you really can't hold me to the day on this. And so the real question now becomes, is this that bottom out there? That's really the question. So what tools can we go use and try to take a look at it and figure that out here? Well, the one tool so yesterday when we take a look at the damage, a lot of time left in the trading session, all the damage was done inside the Russell 2000, right? That's been our weak link out here. Today it's up 4 points. It's a strong link in the market. From weakness, we find strength. It is that way in life all of the time out there. It is that way inside the markets as well. Now, it was off 1%. The other indices, not so much. Really not that bad, right? Well, that's not really true. We always got to look under the covers, because under the covers, we look under the hood, we see the engine, right? Just like making sure that your car is running properly. You don't lift that hood. You don't change the oil. You don't add oil. You're going to have some problems out there. You want to make sure all cylinders are firing. Well, what's the best way to find out if the cylinders are firing inside our markets? Well, we go take a look at the summation index, the price oscillator, and the New York Stock Exchange yesterday dipped below the zero line in its price oscillator. Now, that getting to that zero line, that oftentimes can be a place, especially when we had a rising price oscillator all the way back here in October 31st, sometimes that can be the place where the pullback, and there's not been much of a pullback. I mean, let's face it. If we take a look at the New York Stock Exchange, which is the wider swath of the market, and the most beautiful thing to take a look at to get a feel for what's really going on inside of the markets out here, that made a high of 10,846 out here, and just simply we're trading at 10,916. So kind of 846, 916, what a 50, 60 point move in that period of time out there. Really the sideways market. So it's held up really, really well. If in fact today, I think it was 300 and some odd net advancing issues, we will have a rejection. Yesterday dipped below it, just slightly. Just like we had the composite do on, I think it dipped below it on Tuesday. Monday. Slip a load on Monday and Tuesday. It said, nah, I want to go check the upside. Yesterday it also flipped low, but we want to watch this line. We're really at this kind of like line of demarcation. I don't know what's going to happen here during the day. So it's really an end of day tool that we want to take a look at. If you get to a second day of a negative price oscillator reading, it says we're going to see some kind of retracement in the market. But if we reject this area here, it's worth taking a look at. If we take a look at the NASDAQ composite, the composite's still in the red when I take a look at its price oscillator. It's got a reading minus 0.849 out here. You get below zero. And so the composite, the real strength in the market, right? The real strength in the market. Now, if we take a look at on October 31st, it got up to a high of 46.41. You're trading 46.81. 40 points inside the NASDAQ from October 31st to today. I would kind of you got to give me the benefit of the doubt here to have called the sideways market up until the time frame sideways to lower. I know I said that because I wasn't sure with all the strength, but the super kind of strength that we've had in the marketplace out here and the initiation moves that we've had to get a Zweig thrust signal. We've had 4 basically in 40 years out here. It's pretty uncommon, and it is worthwhile to pay attention to, and that is why I have so much conviction with regard to the markets moving higher into the end of the year. It's now just about trying to pick the spot here for that next move higher. Is it today? Is it tomorrow? Or is it next Friday? Let's wait to see how this market plays out here today. Let's wait to get the composite price oscillator at least above the zero line out here, because otherwise it tells you that it's got problems in its engine compartment out here. Now, it's not the kind of problems like, that's it, it's over, Santa Claus rally. It just means it's got the check engine light on. And like you're a good driver, I'm a good driver, State Farm is there. No. That check engine light gets on, you go ahead and you get it checked out, okay? And that's really all that the composite would be doing out there. Yeah, that's charge State Farm for some commercial time out there. I think that is the State Farm commercial, is it not? If we take a look at the Dow now, its price oscillator here, only 30 stocks. Nonetheless, we really want to watch these. This is where that little nuance, the little subtleties with regard to the market. Right now, you're basically down right around the zero line out here, so it's the first touch of that area. And the Dow, has really been super strong out here. So at this stage, there's been no price. The Dow has been stronger than the New York Stock Exchange, certainly, and also stronger than the composite. Does that mean anything? No, it just means that it's stronger. Does that mean because the New York Stock Exchange, hasn't picked up that it's a weak link out here? Absolutely not. Do you realize how few times you can get up on a New York Stock Exchange into this price oscillator reading out here of 269 to the positive and continue to make higher highs? Folks, it just doesn't happen that often, and it's a sign of an initiation move. When was the last time that we had a rising price oscillator inside of the New York Stock Exchange? Well, by the way, that took place out here in October of 2013. Now, I believe it may have been October 9th, 2013, that we might have got that Zweig thrust indicator. It was either that or back in the 2000. I think it was October 2013, if I'm not mistaken. Now I got to go back, and I can probably pull that up on the charts. I will pull that up on the charts. But in any event, and that was really just the initiation move. Doesn't mean that the market can't move sideways, pull back, and so forth. But certainly we are at higher prices, and that's really what these tools can assist us with. So that's what's going on inside the New York Stock Exchange, the Dow, and the NASDAQ composite out here. So NASDAQ composite still struggling. It's the little engine that, but inside the NASDAQ, we also know that we're going to be paying attention to this level out here, this level being the 4217 area. And that's the level that has acted as support. It's a moving average line on the 2-hour chart that has acted as a support ever since we came off the lows. We saw a little piercing of it here at 4 o'clock this morning, and then the market just kind of moved sideways. So we needed to give it just a little bit of room to see what happened at the open out here, and inside of the open out here, we're well above that area as well. So that is more bullish than it is bearish, especially inside the with the composite having turned negative yesterday. It's really the opportunity for sellers to see what they can do with the market out here. So those are 3 areas that we want to be paying attention to and watching. We also want to take a look at the VIX index here. The VIX index, did we get a punch up there? Oh, we did. I'll be a son of a gun. Okay, so now we're really cooking with olive oil out here. Actually, if you are cooking, you really shouldn't cook with olive oil because if you heat olive oil up, you get it above a certain temperature, and you'd be cooking with olive oil, you're actually going to create more cancerous type. And you're talking to Dr. Steve here. You want to use lousy oil. In fact, don't use coconut oil out there, or don't use oil at all, or use Bragg's amino acids if you're going to be cooking things in and get used to that nice flavor out there. But anyways, the market here is cooked. We're going to say the market's cooking with Bragg's amino acids, and by doing that, we can see that we saw a little spike here in the VIX index. That's what my charts say. It says that we've seen a high today of 1574. Now, that is very important because 1502 happens to be the 50-day exponential moving average. It's the first time that we've seen a test of this area since October 29th out here. And as long as that area continues to get rejected, that message, by the way, would be bullish. Now, here's the subtle thing, right? We know the composite's still below the zero line. The summation index still turned down. The Dow hovering right on it. The New York Stock Exchange had moved down below it yesterday. Because I didn't give you both sides of the trade. If you're going to trade these markets, you should always look at both sides of the trade. You should never attend to a chart and only look at it from one angle. That's like somebody out here, I know somebody's going to do this. Somebody's going to, during this holiday season, somebody's going to say to one of you listening out here, hey, could you go get the salt? And you're going to open up that cupboard and you're going to say, the salt's not here. And it could be your other half. The salt's right there. It's on the second, the second level out there. And you're going to say, the salt's not here. The salt's not here. Of course, you're looking, and then that person's going to walk over there going to say, well, what's this? Oh, you wanted the salt, is what it is that you're likely going to say out there. Make sure that when you come take a look at a stock chart that you open your mind up always to both sides of the trade up here. When you can set up both sides of the trade, that makes things easy. What's nice is that right now, today, the market's kind of got its back up against the wall. So at the end of the day, we'll be able to get a feel for what was the message here at the end of the day. This is a level of resistance that's being tested. Now, from a subtle standpoint, because yesterday was also so subtle out there, if at the end of the day the VIX is above 1502, I don't mean 1503. It's got to be above it. We'll call it, let's call it the high of the session today. The high of the session right now has been 1574, unless I got a bad tick out here. So we'll say if it's trading at 1574, I guarantee you those price oscillators and the summation index for the Dow, for the New York Stock Exchange, for the composite will all be pointing down. And guess what? We're up near the highs here. If you want to take a short ride on the Reading Railroad to the downside, I'd say you've got all the signals to be able to do that. That's if you get all of those three things lining up. So you got to pay attention to what's really going on as we come into the 4 o'clock time frame. Otherwise, you've just seen some resistance areas that have been hit inside of the market. So I hope that helps you to navigate these markets. And if you'd like some additional help in navigating these markets, there is no one that would be more honored to do that than me. So come on over to the homepage at TFNN.com. Sign up for my 7-week workshop. Begins this Saturday. It's 2 3-hour workshops, 7 weeks worth of live series. That's me. You got a question? I got an answer. I will assist you. I will help you so that you understand the patterns that we're looking at. And because I want to teach you how to fish. It is as simple as that. This is Steve Rhodes. This is TFNN. Right now we got the Dow. She's off 45, S&P down 2. We'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow off 33, S&P down 1, composites up, Russell 2000 is up. Let's go out to Plymouth, Massachusetts, to Tom. Tom, thanks for calling. Thanks for holding. How you doing this morning?
I'm doing good, Steve. How about yourself?
Excellent. Thanks so much for asking. You getting all set for Thanksgiving?
Oh, yeah.
Now, are you a host, or do you go visit?
Oh, we'll be hosting about 15, 16 people.
Oh, good. Now, what size turkey, or do you need two for 15?
We'll have two. Good for leftovers.
You gotta love that. Now, what's your favorite part of the Thanksgiving meal?
I'd say after the meal, we'll sit down, have a little social gathering, and watch a few football games.
There you go. Okay, that's right. That's right. You wanted to take a look at, have a happy Thanksgiving, too, by the way. Thanks for calling.
You too.
You wanted to take a look at NUGT, the nugget out there. Tell me what you're doing and how I can help you.
I got in last week, right around the 14 level. I got some more this morning. When it dropped down, I jumped in at 1480. I'm looking to see what you think about where this can head to in the next couple of days.
Absolutely. And so are you in it just for a very short-term trade?
Yes.
Sounds like maybe that's the case out here. Okay.
Yeah.
So you're taking advantage of yesterday. Yesterday kind of reminded me, you like the Steve Miller Band?
Yeah. Yes.
I think he's got a song out there. The song, I think it was called The Joker. And I think
It was.
wasn't it? Was something like, I really like your peaches, want to shake your tree, something like that?
Tree.
Yeah, I think yesterday was really, when I take a look at the minors out there, was really kind of a Steve Miller Joker moment there, where it was really the Bears were trying to shake the tree out here. My opinion is that the minors are moving to the upside out here. And when you take a look at the problem here with the Nugget, is that the NUGT has got some baggage there, and so when you take a look at the top 10 holdings with inside there, you've really got to go see what's going on inside of Barrick Gold. Gold Corp is the number one holding, represents like about probably 13% of the NUGT, somewhere right around here. So if we just start out with that in trying to assist you with the trade out here, what Gold Corp is doing is it's struggling with this little downdraft out here, the non-believers, that this is the time for the mining stocks to move up. And on October 30th, there were 21 million shares to the downside, and the top of that session was 2091, and the bottom of the prior day was at 2142. And it's that 2142 level that you really want to watch inside of Gold Corp. Are you using some technical tools? Do you have access to to take a look at some charts and stuff?
I will be, but no, I can't do it today. So
no, that's okay. That's okay. To answer your question in the next couple of days, what you really want to see Gold Corp do is close above 2142. That's really a nice signal. Now, it got up to 2136 with 11 million shares. Again, that was going against 21 million shares. And yesterday it was 12 million shares. The candle yesterday was scary, spooky, to maybe say, hey, geez, maybe. But I think it was more of a Steve Miller, the Joker song yesterday than anything else. I might have got the words on it, and it might not even be the right song. But I believe that what you really want to be paying attention to is gold. It's waiting, specifically with regard to the NUGT. And then if you're on an intraday trade and we take a look at, for example, maybe a 30-minute chart to see what kind of pattern might be out here and to get really specific on this trade for you on the short time period, if when you were buying, so just as an idea out here, Tom, when price pulled back this morning, it pulled back kind of about the 50% retracement level. And that's coming off of a move up from on November 14th at about 8 o'clock in the morning down around the $11 area. So if, in fact, this low is in, what you ought to see is an A to B equals CD pattern to the upside. And inside the NUGT, inside this short-term time frame, that would say, and that means it's got to get above 1718. So that's the number you're looking for. If you get above 1718, your target should be $20.06, and I would have to say $21.74. But you might be in a trade, if you get up there and volume's accelerating, you might be in a trade that you want to hold for more than just a short period of time.
Okay.
Okay.
Well, thank you so much. Appreciate your advice on that.
You bet. Thanks. Hey, but make sure you keep a stop in place.
Absolutely.
Okay, because we can't control the markets, but we can take a look at what the information is right now. All right, my friend?
Great advice.
All right. Enjoy those football games. Go Lions. Take care, Tom.
Bye.
Folks, that was Tom in Plymouth, and hopefully you're gearing up for Thanksgiving as well. Remember, random acts of kindness. Random acts of kindness. That's where your focus ought to be. Right now, we got the Dow off 25, S&P is flat. Composite up, Russell 2000 up as well. We'll be right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 30 points. S&P still flat. Composite up 9. Russell 2000 up 5 points. And during the break, a couple emails coming in. One from Matt. Matt was, he's a listener all the time. He's at work, can't call in, so no problem there. He wanted me to take a look at Stillwater Mining. SWC is the ticker symbol. So let's go. Stillwater Mining is a platinum play out here. Right now you've got platinum is back, looks like back $5. Not moving, is it? Must have the wrong contract. Maybe it's just not moving. Let me take a look here just to make sure. It's been like at 5:30. Yeah, well, platinum doesn't move that much, though. Does it? 1198. What's the date here? No, yeah. Okay. Let's go take a look. Let's do a quick correlation out here. So the top portion of my chart out here is platinum. The bottom portion of the chart is Stillwater Mining out here, Matt. So what I wanted to do, since it's a platinum play, I wanted to be able to go ahead and put the correlation up here on the screen so that you could see that. So Stillwater Mining at this stage here has actually been stronger. If we take a look at the bottom, it's been making a series of higher lows out here. Now, we'll come back to the actual candle chart in a moment, but I thought it'd be a great way for Matt to be able to see the correlation here. So you're really going to see, and you can see the directional price from the standpoint of Stillwater, and so platinum really needs to be taken up to the upside for you as well. So now let's go back and take a look at Stillwater. But at this stage here, stronger than the actual metal out there. And if we take a look at ticker symbol SWC right now, yesterday really the same thing we saw basically across the board inside the metals market. Now, that's Steve Miller tune out there. I know this is not an adult show, but what was the verbiage there? Really like your peaches want to shake your tree or something? I think that's what it was. And I think yesterday was really the shaking of the tree inside of the gold, inside of the mining, just to see if they could shake out some of the weak hands out there. And if we take a look at it, and I mean, really, you take a look at the candlesticks, in some cases, you had some pretty decent volume out here. So I can understand maybe wanting to. So the question was, where's a good entry point inside of Stillwater Mining? Well, if we take a look at it right now, you've got this high volume low out here from the trading session of November 5th. So if you want the ideal, and I do mean ideal entry point, well, it's going to be the low of that session as a test on light volume out here. That's $11.81. You're at $12.91. So you got $1 risk right now. So he's been in and out of it for a period of time. So I don't know whether you're looking at this from a longer term standpoint. If platinum is going to bounce like the gold and silver, I don't follow platinum that well to know. I don't, take a look at any commitment of traders data or anything along those lines. But the metals all ought to move at the same time. The U.S. dollar index ought to pull back. The euro ought to be moving higher. That'll put some energy into all of these things. If that is really going to come to fruition, well, then you ought to at least see SWC still ought to move up to 1469. So you got to really do the math, the risk reward. You're at 1280, so call $13 to 14. So you got $1.50 in the way of reward, and you've got $1 of potential risk to the downside out there. Now, it's the 0.382 that would be the natural area, just a dead cat bounce. The reality is you should really be looking at 1647. So what you're really looking at is about a $4, looks like about a $4 move to the upside and a $1 move to the downside. That seems to me, just do the proper position sizing. What does that mean? Hey, if you're not a Mastering Probability subscriber, you don't have access to my position size calculator, but I'll give you that formula. It's a secret sauce out there. Just simply take your capital, your trading capital, your free trading capital, and if it's $100,000, take 1% of it. $100,000, 1% is $10,000. That's what your total risk. No, $100,000 would be $1,000. Hello. $1,000. So that's what your total risk would be. Take that $1,000 as your risk, divide that by the stop that you're going to use. In this case here, I'm saying like $1, but use the exact amount, $1, and that would say you could buy 1,000 shares. Now, 1,000 shares would be $13,000 worth of this one equity, trading at $12.87. That would make it 13% of your $100,000. That might be a little bit high out there. So maybe you want to lighten off a bit. You don't have to take a full 1% risk. You're really on an individual stock. You want to try to keep it around that 10% range out there. But ideal buy, maybe you scale in now. You scale in now and you pick up the other half if price moves back in that high volume low out there. And then, of course, you take your stop if you see a low below that 1181, especially if it's picking up steam to the downside. So that was for Matt taking a look at the Stillwater Mining out there. One of the other emails that came across that came across during that break was said that Steve, listen to your show all the time. I'm kind of paraphrasing. I got to look over here, but and you call yourself Steve Perseverance Rhodes. And how is it that you stay so positive out there? How is it that you stay so positive? So I think that's a great question. And thanks for sending me the email and even asking me about it. It goes like this. Here's the deal, because I'll give you the formula for that as well. In fact, you can write these words down here. It's called reframe and elevate. Of course, that's 3 words, right? But reframe and elevate. Those 2 specific words, if you learn how to do that, if you learn that tool, because you see, what I can assure you of is that as positive as I am, it's nothing more than me reframing and elevating every time the universe throws stuff at me. But you could use another word, that begins with an S, and then, and you know what it ends with. It rhymes with hit out there. And the universe is going to do that. I guarantee you I have had more shinola to have to deal with than most human beings on the planet. Yet people say, how is it that you stay so positive? It's about reframe. Steve Jobs, first time I met him was 1984. And then 20 years later, he and his family came through my retail store that I had at Epcot Center. In fact, he and his family were the single largest individual purchasers of my product. It was a couple grand worth of a product that they bought in that one swoop out there. But Steve Jobs, he lived by a principle out here. Now, a lot of people think that Steve Jobs touched their life because their iPhones or iPads and all that type of stuff. I'd say you're missing the whole point, really, of Steve Jobs and his philosophy. If you want him to really touch your life, live by this principle, which is one that I've adopted as well. It means every morning look in the mirror, look at yourself, and say, if this was the last day of my life out here, because it could be, none of us have really control over that, am I doing what I'd want to be doing? And if you can answer yes, which I answer, and I can answer this for you right now, I'm doing exactly what it is that I want to be doing. There is nothing that I would rather be doing than being here with you. There's only one thing that I would rather be doing, and that's what I'm going to be doing this coming Saturday at the workshop, the 7-week trading course that I'm going to be holding out there. Now, you take these philosophies in life because what you want to do is life is going to throw circumstances at you. It just absolutely is. And what you have to do is you got to be able to find the gift in everything out there. And when you start living and the way to do that is called reframe and elevate. Go find the beauty in everything, good, bad, or indifferent that happens to you. Like there's been plenty of people that have been up, like when it comes to trading and investing, okay? When it comes to trading and investing, have any of you been in a losing trade and stayed in that losing trade longer than you should have? Have any of you ever, am I the only one that's done that? Am I the only one that's done that more than once? I had to learn things the hard way. If you're new to this game out here and you're listening to me, learn from my mistakes. Do not repeat those mistakes. When I was on the phone with Tom and we were taking a look at Tom Plymouth, taking a look at the NUGT before we hung up, I said, but make sure you've got a stop in place out there. Because if you trade without stops, and that means a one cancel other order out there. That means you have both sides of the trade. That way you can go do what you want to do. You can go fishing, you can go golfing, you can go hunting, you can go shovel snow if you're up in the Buffalo area, and you can have your trade on. Make sure that you understand how to go ahead and place that the one cancels the other. That way you've got both sides of the trade out there, because you do not want to have the pain that is inflicted with being on the wrong side of the trade, staying on the wrong side of the trade. Maybe you've never done this before. I have. Maybe you've never said this to yourself, but if I sell now, I'm probably the last guy and the stock is going to turn around. If you ever done that out there, if you have, raise your hand, right? Because I know that there's folks that are out there. And so make sure that you find a gift in everything, reframe, elevate, and you want to really be able to learn how to do that and do this during the holiday season right now. Because there's going to be people, this is a tough time of the year for many out there. It's a tough time of the year because they think things haven't really gone their way. And it's up to you. It's up to you and I to help them find the beauty in really, there's no loss other than not gaining the lesson, not learning the lesson from whatever it is that might go wrong inside your life out there. So I guess that's kind of the short answer with regard. And it's so important when it comes to trade and investing. There is nothing more important when it comes to trading and investing than this aspect of the game. We can talk about charts, where things are going to go to, which I'm glad to do, and patterns that are out there, which I'm really happy to do, and I'll be doing this coming Saturday. But the real reality of this game here, in this business of being one man, one woman armies out here, because that's all that we are, it's being able to buy that retracement when things are pulling back to you instead of being a deer in the headlights, and it is being able to sell at the when your price objectives are met out there. This is a game of psychology, and they're going to have bad days out there. I can guarantee, I can promise you that. You're going to have bad streaks. I can promise you that. And it's really all about just simply reframing it, learning from it, and moving on. And if you can do that, you can be way more Mr. Positive than I am out here, and that's what you should do. Hey, by the way, on my screen here right now, if you're watching us on Tiger TV, it happens to be all of the different mining stocks out here. They're all to the upside. They're all slightly green. The biggest gainer out here this morning, percentage-wise, you've got a couple of them. You've got Allied Nevada, and you've got Goldfields out here. We take a look at both of them. Let's go do that. Let's take a look at ANV out here. Now, Allied Nevada, here's one of those Steve Miller talk about shaking the tree out here. here. Yesterday there was a little bit of shaking going on as Allied Nevada pulled back with 11 million shares. Nonetheless, pulled back with 11 million shares, and hey, it doesn't conform to the type of A to B equals CD pattern that Tom teaches in the Art of Timing the Trade. I'll teach you that one, and I'll teach you the other pattern that also exists inside the marketplace. But in this case here, you take out the November 18th high, which is priced out at $2.04. You do it with more than 9 million shares, and you'd have an A to B equals CD to the upside out here. So Allied Nevada actually is getting into bullish formation out here. Up, it doesn't take much, doesn't take many shekels, many pennies to be up, 12%. It's a $1.68, and yesterday closed out at $1.49. Still a nice move nonetheless. Goldfields, another mover out here. Now that's up 24% out here. If we take a look at Goldfields, similar to yesterday, you'll see this as we take a look at now. Goldfields stronger than Allied Nevada, without a doubt. If you're going to ask me A or B, which one should I put plink money down on to? I would say Goldfields for sure. And why would I say that? Just take a look at this. Now, yesterday, Goldfields was not even able to close the little gap up. That was a little gap up from November 18th. That's all it was doing. There were 7.8 million shares down at the low of 409. Yesterday got down and closed out at 409, right on that with 8 million shares, 8 million going against about 8 million. It was actually just a little bit higher volume here yesterday, but still that is a level of support. This thing here was actually making a higher high yesterday as well with some volume out here. So Goldfields, that is on its way out to this level out here, right around the price point of August 29th. That's the swing point that it is targeting at a minimum. That's right around 494. The low down there about 466. That is where Goldfields should be headed to. Let's go take a look at some things here. Let's go see what's moving and grooving in the marketplace. So we're back to about even Steven. The real question with the Dow just turned green out here. So really, let's go see what's going on underneath the covers. Let's go take a look at that summation index. Yeah. So the Dow has moved off of that line. NASDAQ is still just slightly negative, minus 0.57, but it can easily heal that pain out here. And we have the VIX index touch and go. And what we took a look at, if you didn't catch the first hour of the show out here, we looked at the Russell 2000. From weakness, we find strength. I guarantee you that is how it works in life out here. And that weakness, we saw the Russell 2000 give us really, yesterday was just kind of like an ideal ultimate trade setup if you wanted to take the long side of this trade out here. But it formed that little hammer candle at 12 noon. Now, really just rest of that area didn't get down there, but it's completed a 1-to-1. A to B equals CD. Got that hammer candle. That says the bulls are hanging right at that 11.4820. And the real question is this really the buying opportunity? Is this the selling opportunity? And I'm gonna hold out until I see how the day closes out here. But in a strong move to the to the upside, which is what we've had off of these lows back here on October the 15th, October the 16th. In the case of the Russell was back on October the 14th. You've not had a seventh wave count to the downside out there. That's really stretching things to the downside, and for now that to act as support on a 2-hour chart out there, it does have to make us say something to think about. Some things that are also moving in the marketplace. Let's take a look at a couple things to the downside out here. Did we take a look at Green? I think we looked at Green Mountain Coffee Roasters. Let's go take a look at Athena Health out here. ATHN is the ticker symbol. That's down about $5 right now, gapping down. Has a high volume low. Should be headed to. It's got a couple of. It's got a hammer candle down here as well. How about that? If we take a look at Athena, that hammer candle that's not been tested. It's also high volume lows at 97.30. This has got also a swing point down here from October the 17th. That's at 107.88. Looks like Athena Health probably headed to 107.88. If it breaks through there, it should find support at 97.30. It should at least go test that support level of 97.30. You break that, and then that would be one very mucho grande Starbucks large A to B equals CD to the downside. Dow's off 3, S&P is up 3. Steve Rhodes with TFNN. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. When you first learn something in life, you have the most questions as you begin to apply that knowledge, which is why Steve Rhodes came up with the idea for his 7-week trading program. It all begins Saturday, November 22nd, when Steve Rhodes will host a live 3-hour morning workshop where he'll teach his attendees the precise methodology he uses when placing trades. You'll then receive 6 weekly updates each Monday morning discussing the possible alerts currently setting up in the market. Steve will then bring everyone back together for a final 3-hour live workshop Friday, January 9th, where he'll discuss the methodology that went into each of the 6 weekly updates, making sure that you're confident in applying what you've learned so that you can begin navigating the market on your own. You can sign up right now for this entire 7-week trading program with Steve Rhodes for a one-time payment of only $395. If you're a Mastering Probability subscriber, then you can save an extra $100 price. For all the details, visit the front page of TFNN.com right now.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's off 9, S&P is up 2, Composite up 16. Russell, lead dog out here, up 7 points. In the immortal words of one of my mentors out there, that's really what the 7-week trading workshop is all about. It's really about me being able to mentor you, coach you, assist you, teach you. But in the immortal words of one of my mentors, Jim Rohn. If you're not familiar with Jim Rohn, go out and get some of his books out there. Just absolutely fabulous books. You'll understand where some of my philosophies come from. So let him touch your life as well. But he always used to say, hey, always be eager to learn, no matter how successful you might already be. He says this, in the Millionaires Club, we sometimes invite a billionaire and that billionaire comes in and he says, hey, you guys are doing okay, but come on, how about if you really poured it on? Well, this coming Saturday, I will really be pouring it on and assisting people with their trading and investing. I hope that you are one of the souls as well that'll be out there. It's going to be a great time. Come over to the homepage at TFNN.com. You're looking at, for the number of hours that I put into what you're going to get, you're paying about 3 cents an hour out there. So let me save you time and let me save you money. As we end the session here, our man Basil Chapman, he's going to be up next, and we got Larry Pesavento. It's Thursday. It's terrific Thursday. That means we've got the full lineup out there. That means Daryl Martin, David White, Tom O'Brien show. No Daryl. Okay, well, Daryl is off. Maybe he's in Vegas or something today. And then we've got, speaking of Vegas, we go out to Andy Heck from 5 to 6 out there. So almost a full lineup out there. What is it that we're going to focus on? Remember, we want to take a look at the VIX index out here. We want to look for these little subtle elements. The VIX is at 1380. So long as it trades below 1501, it becomes a rejection of a level where the markets either move sideways to higher. Markets do not pull back when the VIX index is below the 50-day exponential moving average. You can prove that to yourself out there. So that's one thing to be focused on and paying attention to. We'll also watch those summation indexes. The NASDAQ still just slightly negative out there. So that's given us a little bit of a warning shot across the bow, but that's all that it is. All right, now you've got the New York Stock Exchange. It's rejected its negative price oscillator out there. It's got enough market breadth to turn that thing to positive. So I can tell you one thing is for sure. The bulls are not giving up. Inside the futures market, well, it becomes pretty simple. It is back at that 42.17 mark. You don't see a close below that. We've just started just simply on a 120-minute chart time frame, a new count to the upside out there. So that is a beautiful thing, recycling its way higher. That's on the NASDAQ. Inside the ES Mini out here, of course, it went ahead and formed that little hammer candle here yesterday. And guess what? That hammer candle held as support. So basically completed a 1-to-1 A to B equals CD to the downside. Didn't hit the exact number out there, but remember we use these as guidelines, as Jack in, that wasn't Jack, it was Barbosa would say in Pirates of the Caribbean. It's just guidelines out here. Those guidelines gave you a price projection 2034. We saw price actually get down to 2035, so not too shabby out there. It was only off by one total, one buck out there, one buckaroonie. So it looks like this is, in fact, if the ES Mini can get above the price point of 2,052 out there, that'll just say higher prices are coming at you today. That's on the ES Mini. And inside the Russell 2000, if I switch back here real quickly, let me see. Let's come back, and who's leading the charge out here? Yeah, percentage-wise. You got the Russell is up 0.5%, and XAU, that's up 1 full percentage point. But of the four indices, it's the Russell that's leading the charge out there. So, folks, stay tuned. Get over to the homepage at TFNN.com. Join me this coming Saturday. Hey, if you can't be there on Saturday, no problem. It's going to be archived, and I'm going to love to be with you for the following 7 weeks after that. Have a great Thursday, folks. We'll talk to you maybe later on this afternoon. Take care, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.